Hey everyone, and welcome back to the Deep Dive. If you happen to be tuning in from the Stock Talk podcast feed, a special welcome to you. Definitely make sure you're subscribed right here so you don't miss any of our deep dives. We really get into the core information from the day's sources. So today, June 3rd, 2025, we're cracking open a whole stack of reports. We're looking at market pulse, economic shifts, the works. Our mission, as always, is to pull out those crucial insights, maybe some unexpected connections, and just the need to know details that might be hiding behind the big headlines. We're covering quite a range today. Big tech's energy needs, AI plans, tariff impacts, key economic numbers. It really feels like one of those days where the specific company news and the bigger economic picture are just completely tangled together.
Yeah, definitely. We've pulled stuff from the Wall Street Journal, CNBC, Reuters, CBS, CNN, The Verge, trying to get that full picture for you. And what really jumps out today, I think, is how fast tech, especially AI, is moving. It's driving company strategy. It's driving energy demand. And all that's happening while it's bumping up against, global policy choices and the sort of classic economic numbers we always watch.
Okay, that's a great way to frame it. Let's unpack that intersection. Maybe start with that big tech and energy headline, Meta and Constellation Energy.
Right. That's a really significant development. So Meta's signed this huge power purchase agreement, a PPA, with Constellation Energy. It's a 20-year deal.
20 years, wow.
Yeah. And they're specifically buying nuclear power from Constellation's Clinton plant over in Illinois.
Nuclear power just for AI. That really says something about the scale of the energy challenge they're facing, doesn't it?
It absolutely does. This whole deal is structured to fuel Meta's, rapidly growing AI infrastructure. Power starts flowing in 2027.
Okay, 2027. And the market noticed this.
Oh, yeah. Immediately. Constellation Energy shares, they surged a full 14% just on this news. It's a clear signal, right? Long-term demand for reliable, high-capacity power. And the takeaway isn't just this one deal. It's more about, the sheer energy hunger of this next-gen AI stuff and how companies are getting creative to lock down that power.
That 14% jump is pretty telling. And speaking of market reactions, kind of driven by outside factors, let's look at steel. That sector moved a lot yesterday because of policy, right?
Right, yeah. Steel stocks kept surging yesterday. It's tied directly to those increased tariffs on imports. The sources we saw pointed out some really impressive jumps. Cleveland-Cliffs, up 22%.
22%.
Yeah. Steel Dynamics up 13%. Nucor gained 12%. It just shows that immediate, strong, positive kick that, protectionist trade policy can give to specific domestic industries, at least, in the short run.
Right, short-term benefit, clearly. Okay, shifting gears a bit. Another big company making moves, Disney. Efficiency seems to be the word.
Yeah, Disney's reportedly planning more job cuts. The sources suggest hundreds of positions are going. Film, TV, corporate units. It seems to be part of that ongoing restructuring they've been doing. Trying to streamline things, boost profits in what's still a pretty tough media landscape.
And how are investors taking that news? Any big stock reaction?
Not huge, actually. Shares dipped slightly, like down 0.4%. It seems like the market sees it as more of a long-term efficiency play, maybe not something to get immediately excited about.
Okay, let's circle back to Meta for a second.
Yeah.
Beyond just buying power, they're weaving AI right into their main business, right? Advertising.
Oh, yeah. And this is where it gets really interesting for their actual revenue model. The plan is to fully automate ad creation using AI by 2026.
Fully automate, like the whole process.
That's the goal. Brands could just input some basic info and the AI generates the whole campaign, the creative, the targeting, everything.
That feels like a massive shift in how ads get made and delivered.
Yeah.
And it really underscores why they need all that AI infrastructure, all that power we just talked about.
Yeah. Exactly. You got to remember, ads brought in over 97% of Meta's revenue in 2024. That was like, what, $42 billion?
Huge number.
So that giant ad revenue stream, that's what's paying for these enormous AI ambitions. It's kind of a feedback loop, isn't it? Ad money funds the AI. The AI makes the ads better or cheaper to make, which hopefully drives more ad money.
Makes sense. Okay, let's check in on Elon Musk's world. Updates on a couple of his ventures today.
First up, Neuralink. That's the brain-computer interface company. They just secured a pretty big chunk of new funding.
Oh yeah, how much?
$650 million. Came from major VCs, venture capital firms. It signals, strong investor belief in the potential there, even if it's still very long-term, maybe speculative.
$650 million is definitely serious belief. Okay, and Tesla. Anything happening there?
Well, they had a really remarkable sales month in Norway, specifically.
Norway, okay.
Yes, sales jumped 213% year over year just in May. They sold 2,600 cars, compared to only about 830 the year before.
Wow, that's a huge jump. Any reason given?
Sources said it was really driven by strong demand for the Model Y. So, even with questions about the broader EV market, some regions can still show incredible growth.
Interesting. Rapid growth in specific spots then.
Yeah.
Another company in automated transport, Waymo, Google's robotaxi unit, they hit some kind of milestone.
They did. Waymo just passed 10 million paid rides.
10 million, that feels significant.
It is. But maybe even more telling is the pace they're hitting now. They're doing around 250,000 trips every single month.
250,000 rides a month, okay.
Yeah. And they're actively expanding new U.S. cities. They're even moving into Tokyo.
So 10 million is the proof point. But that monthly volume, the expansion, it suggests they're really trying to shift from like experiment to potentially viable business.
Right, exactly. Seems like it. And AI is just causing ripples everywhere. Creative industries are definitely feeling it. Music, for instance.
Right. What's happening there?
Well, the big music labels, Universal, Warner, Sony, they're apparently in active talks, negotiating AI licensing deals. Companies like Suno and Udio, those are the ones making AI models that generate music.
Okay, so what are the labels trying to get out of these talks?
It seems like a few key things. One, they want compensation, for using their massive music catalogs to train these AI models. Makes sense.
Right.
Two, they want tracking. If an AI makes music that sounds like their artists or uses bits, they want to know about it. And three, they want artist opt-out rights, so artists can say, no, don't use my music for this. These talks could maybe settle some lawsuits that are already flying around. And maybe, just maybe, the labels could end up owning a piece of these AI music startups.
Huh. It's like trying to fit a square peg, this new AI tech, into the round hole of existing copyright and creative business. Complex stuff.
Very complex.
Okay, let's shift gears slightly. Healthcare trend. GLP-1 drugs like Wegovy, what's the story there?
So reports show that prescriptions for Wegovy, specifically for U.S. teenagers, went up 50% in 2024.
50% increase. That's pretty big growth. Good news for Novo Nordisk, I guess.
For the company, sure. It shows growing use in that age group.
But is it actually reaching a lot of the teens who might need it for obesity?
Well, that's the catch. According to the sources, not really yet. Even with that growth, it's still only a tiny fraction of adolescents with obesity who could potentially benefit.
So what's holding it back?
The usual suspects, mostly. Insurance hurdles are a big one. Cost, obviously, and other concerns too. So yeah, demand seems to be rising, but actually getting it, that's still tough for a lot of families.
Gotcha. Okay, let's hop across the globe. Japan. A big corporate move from Toyota.
Yeah, Toyota Motor is planning to take one of its affiliates, Toyota Industries, private. It's a huge deal, like $33 billion.
Taking it private? Why?
Right.
What's the strategy?
Well, it's kind of interesting in the context of how Japanese companies often work. Part of it is about unwinding those really complex cross-shareholdings you see between related companies there. It's also seen as a way to tighten the founding family's control over the whole Toyota group. And it fits with these corporate governance reforms Japan's been pushing, trying to make companies more transparent, more efficient. So it's kind of internal control meets external pressure for modernization.
Interesting. A move driven by both legacy and future pressures. Okay, looking ahead in tech. Google. Any buzz about new phones?
Yeah, there's a report out saying Google's probably going to launch its Pixel 10 lineup on August 13th.
Pixel 10 already. What's expected?
Well, the lineup might include the standard Pro, a Pro XL model this time, and an updated Fold, the foldable one.
Okay. Any new features to look out for?
The big things expected are their new chip, the Tensor G5. And, no surprise here, enhanced AI features. Seems like every tech launch is about AI now. Oh, and the Pixel Watch 4 is likely coming alongside the phones, too.
More AI everywhere. Got it. Sticking with AI for a sec, there was something about crazy valuations for AI startups doing code generation.
Yeah, truly eye-popping valuations. We're talking about companies like Cursor and Windsurf.
How high are we talking?
Cursor is reportedly valued at $10 billion. Windsurf at $3 billion.
$10 billion for a tool that helps write code. What's driving that?
It seems to be just massive demand for tools that can automate or seriously speed up software development, especially stuff that might replace or, augment what entry-level coders do.
Yeah.
It really shows how much the market believes AI could fundamentally change how software itself gets made.
Wild valuations. Okay, that covers a lot of company-level stuff. Let's zoom out now, connect this to the broader economy, starting with an international forecast, OECD.
Right, the OECD, that's the Organization for Economic Cooperation and Development, they've actually downgraded their forecast for U.S. economic growth in 2025.
Downgraded to what and why?
Down to 1.6% growth. And the why is interesting. According to the source reporting on it, the OECD is specifically warning that tariff policies are causing more economic damage than they previously anticipated. They also bumped up their forecast for U.S. inflation, now expecting it to hit 3.2%. And they noted global growth is likely slowing too.
So that's a perspective, linking trade friction directly to slower growth and higher prices. Contrasts a bit with the boost we saw for steel stocks, doesn't it?
It does. It shows how these things can have very different effects depending on where you sit in the economy.
Speaking of inflation, we got some numbers from Europe today.
We did. Eurozone inflation dropped to 1.9% in May. The key thing there is it's the first time it's dipped below the European Central Bank's 2% target since way back in 2021.
Below target, what drove the drop?
Sources said it was mainly due to services prices finally starting to ease off a bit.
Okay, so inflation looks a bit different depending on which side of the Atlantic you're on right now.
Seems that way.
Now, back in the U.S., those tariffs the OECD mentioned, reports say they're really hitting small businesses hard.
Yeah, this was a really interesting insight. Small businesses are apparently struggling to navigate what the source called a really unpredictable tariff environment. Sudden changes, court battles over duties. It creates a ton of uncertainty.
And what does that uncertainty actually do to them?
Yeah.
Like on the ground?
Well, the source detailed how it messes up their supply chains,
Yeah.
causes unexpected cost hikes that are really tough for small outfits to just absorb. So they end up having to make hard choices, like cutting employee hours or delaying new products, or they're scrambling to find totally new suppliers, maybe even new markets, just to avoid these unpredictable costs. It sounds like it's causing real financial strain and making it super hard to plan ahead.
That's a stark contrast to the big domestic steel companies getting a boost, isn't it? Really
Yeah.
shows the uneven impact.
Definitely.
Okay, another sector seeing big changes. Real estate, office space specifically. What's happening there?
This is pretty dramatic. For the first time in over 25 years, the U.S. office market is projected to actually remove more space than it adds in 2025.
Remove more than add. How does that
Yeah.
work? Demolition and...
Yeah, demolition or converting office buildings into other things, like apartments. The numbers cited were about 23.3 million square feet expected to be removed,
Okay.
compared to only about 12.7 million square feet of new office space getting built.
Wow, that's a big imbalance.
It really is. It's a clear sign of the intense pressure on the office market, driven by remote work, changing habits, could signal a really long-term shift for downtown areas, property values, the whole thing.
That imbalance is definitely striking. Lastly, on the macro front, we got manufacturing data from China.
We did, and it wasn't great news for them. China's manufacturing activity contracted pretty sharply in May. The Caixin PMI, which is a key index people watch.
Right, the Purchasing Managers Index. Below 50 means contraction.
Exactly, and it fell to 48.3. That's a noticeable dip into contraction territory, and it's actually the lowest reading they've had since 2022.
Any reason given for the drop?
According to the source, it was heavily driven by a collapse in new export orders, and they linked that specifically to steep tariffs hitting demand for Chinese goods from other countries.
So reports suggesting tariffs are not just having mixed effects in the U.S., but also showing up as a drag on manufacturing over in China. Paints a complicated global picture.
Very complicated.
All right, let's quickly run through the financial snapshot from today's sources. Few earnings reports came out.
Yeah, quite a few. About Ferguson Enterprises, they do plumbing and HVAC distribution. They had a good quarter. Beat on revenue and profit. Revenue was $7.62 billion, up over 4% year over year. EPS, earnings per share, was $2.50, up almost 8%. Nice beat.
Okay. Dollar General, the discount retailer.
Also beat forecasts. Revenue hit $10.44 billion, up over 5%. EPS was $1.78, up almost 8% year over year. So solid performance there too.
And Credo Technology Group, you mentioned connectivity solutions.
Yeah, the numbers were pretty explosive. Revenue, $170 million, but that was up almost 180% year over year. Huge beat. And EPS was $0.35, which was up 400%. Really stands out.
Wow, 400% EPS growth. Okay. Donaldson Company, filtration.
They also posted a beat. Revenue, $940 million. EPS, ever 99. Showed some modest growth year over year, beat estimates slightly.
So mostly beats, but was there a miss in the mix?
Yeah, the main one reported was NIO, the Chinese EV maker. Their revenue grew over 20% actually to $1.66 billion, but it missed analyst expectations by about $72 million. And their loss per share, it was 0.41 cents. That was also a little wider than analysts were looking for.
Okay, got it. Now looking ahead, any potential IPOs this week?
Sources noted a couple of estimated IPOs. Remember, these dates can always shift. But potentially on Thursday, Circle Internet Group might list. They're known for the USDC stablecoin.
Right. Any numbers on them?
Source mentioned about $1.68 billion in trailing 12-month TTM revenue and about 15.5% revenue growth.
And Friday?
Possibly Omada Health. They do virtual chronic care. TTM revenue around $190 million, but with much faster growth, nearly 38%.
Interesting contrast in growth rates.
Yeah.
Okay, and finally, just quickly, key economic data points to watch this week.
Right, the puzzle pieces we're waiting for. Today, Tuesday, we get JOLTS job openings that tells us about labor demand and factory orders data.
Then tomorrow, Wednesday?
ISM Services PMI, that's the health check for the big U.S. service sector, similar to the manufacturing one we talked about for China.
And Friday's the big one, usually, right?
Often is. Non-farm payrolls and the unemployment rate. Key readings on the job market's health.
Okay, those will definitely add more context to everything we've discussed.
For sure. They'll give us a clearer picture of the U.S. economy, especially labor and services.
Wow. Okay, we really did cover a lot of ground today. From, like, the nitty-gritty of Meta needing nuclear power for AI and Disney restructuring, all the way up to the macro impact of tariffs hitting steel stocks one way, small businesses another, and even showing up in China's manufacturing data. We saw AI just popping up everywhere. Ads, coding, music, plus shifts in healthcare access, and that really fundamental change in the office real estate market.
It really does hammer home how interconnected everything is, doesn't it? You know, Meta needs power, and suddenly Constellation stock jumps. A tariff decision ripples out, helps one industry, hurts small businesses, maybe slows down global trade. And this relentless march of AI is just reshaping whole sectors right before our eyes. Media, software transport.
Absolutely. It really makes you think about that push and pull. You've got this super fast technological change clashing sometimes with economic systems, policies that maybe aren't adapting quite as quickly. So maybe here's a final thought for everyone listening, something to chew on. How do these really powerful forces of tech innovation, we talked about AI getting into everything, autonomous systems scaling up, how do they interact with and maybe even redefine the challenges we see from economic uncertainty, policy disagreements, and these big shifts in the physical world like the office market?
Yeah, it's a really dynamic interplay.
Yeah.
And figuring out how those forces influence each other, that feels pretty key to understanding where the market and the economy are headed right now.
Definitely a lot to consider as we head through the rest of the week. Well, thank you so much for joining us for this deep dive into the market and economic insights from June 3rd, 2025. We really hope this gave you some valuable perspective.